Well, what the heck? One more. Wolfstreet.com, a subject I've talked about countless times, especially in California. San Francisco's housing market, incomes and disconnects, according to the Planning Commission. It's called a housing crisis for a reason. We discussed the insane San Francisco housing market. It's usually in terms of median asking rents, $4,680 a month for a small two-bedroom. The median single-family house price of just a mere $1.7 million. The median condo price of $1.2 million. Or the Case-Shiller Home Price Index, 11% year-over-year surge. As different as the data may be, all of the data agrees. San Francisco is a horrendously expensive place to live, but beneath the summary data hides the complexity of a housing market that is now commonly called the San Francisco housing crisis. So for the first time, and to get a better grip on the issues, the SF, or San Francisco Planning Commission, has prepared a Housing Needs and Trends Report, or HNTR, which is a 12-page executive summary, 88-page full report. The report represents more than a year's worth of effort by both planning staff and consultants to gather and analyze data, it says. So here are some key findings. And by the way, before I get going, you remember my story for the 400th time? Dave, my buddy Dave. Joe, I'm going to send you some pictures when I get back to near Silicon Valley. Streets on both sides lined with RVs. Six-figure income earners, most of these people, living in an RV. How much is an RV? Well, you can get a used one for under $100,000. A nice one, even a new one. Maybe not a diesel pusher, but a decent new RV for 80, 90 grand, brand new. A used one, half that price, if not less, 30, 40,000. And you're gonna live a little differently, but shoot, at least I don't have to crack a mortgage of a 1.7 mil. Sheesh. Anyways, San Francisco is a city of renters. 65% of the homes are renter occupied. Only 35% of the homes are owner occupied. Over 60% of all rental units are in rent controlled buildings. In San Francisco, rent control only applies to older multifamily buildings. It does not apply to buildings completed after June 13, 1979, and it does not apply to condos and single-family homes that are rented out. In other words, none of the newer housing stock is rent controlled. Rent control in San Francisco means that when the unit comes on the market, it is rented out at market rent. But annual rent increases from that point on are limited based on a measure of inflation. Even rent-controlled units are becoming less affordable. Of the 160,000 rent-controlled units in 2015, about 100,000 units were rented at rates that would be affordable to households earning less than 80% of the area median income, or AMI, down from 140,000 in 1990. A household of two that earns less than 80% of AMI, according to the Mayor's Office of Housing and Community Development, currently makes $75,750 or less a year. The Planning Commission's report pointed out units rented in the previous 2 years show the erosion of affordability of the city's rent-controlled stock, whereas in 1990, a substantial majority of all recently rented out rent-controlled units were rented at rates affordable to lower-income households. By 2015, only 10,000 such available units were affordable to those households. 9% of households live in about 33,000 affordable housing units, where rents and sale prices are set so that they're deemed to be affordable at low and moderate income levels by San Francisco standards. San Francisco's growing density. Buildings with more than 5 units account for 52% of the city's housing units, but occupy only 19% of its land area. Single-family homes account for 27% of the housing units, but occupy 62% of its land area. Not lack of supply, but lack of affordability or affordable supply. In 2017, thanks to the construction boom, new construction created about 4,500 new housing units. In 2016, new construction created over 5,000 new housing units. This is way more than double the historical average since 1990 of just 1,900 units per year. Practically all of them were multifamily buildings. But of those units built since 1990, 28% are deemed to be have been affordable to low and moderate income households. Cost has an impact on who lives in San Fran. High costs attract high income households. Lower income households are leaving. The number of households earning more than 120% of AMI for a household of two, that would be $113,650, tripled since 1990. And of them, 82% are now high income households, earning 200% or more of AMI. For a household of two, that would equal $189,400. The number of low and moderate income households earning less than 120% of AMI, that would be two households, less than $113,650, dropped more in San Francisco than in any other region, I guess. It says than in the region. This change may be due to households increasing their earnings, or it may be because of more of these households left the city, or a combination of both. The number of workers who work and live in San Francisco has reached an all-time high of nearly 500,000 people. The majority of the increase in workers in San Francisco has been driven by workers earning more than $100,000 per year. Individual workers, not households. However, workers, not households, earning less than $75,000 but continue to be the majority of workers in San Francisco. But with two of those $75,000 a year earners into one household, the household makes $150K. The number of high-income workers, and here's what I got to stop for a second. Could you imagine making that kind of money? Most of you, that's good money. Family of two, you're making $150K or more a year. Sheesh, great. And then throwing it all away because you live in this little tiny 2-bedroom house or condo or whatever. No property, no back porch, little piece of grass with your name on it. Can't park a boat here, sir. Nope, you can't park that here, sir. You're only allowed 2 cars because there's not enough room, sir. HOA fee, sir. The number of high-income workers earning 200% of more of AMI has surged by 240% since 1990, with over half of that increase coming since 2000. At the same time, workers earning less than 120% of AMI, an individual worker making less than $99,500, are actually leaving. In the chart below, which I'm not going to really show you, I'll just tell you about it. Note the increase of workers making 30% of AMI, which is $24,850. Would that be students? Click to enlarge. And I think I will click to enlarge. And since I'm going to do that, let's go ahead and share it. 200% of AMI, well, big old increase. 80 to 100%, 50 to 80%, 30 to 50%, and 30% or less. I mean, we add all this up, it's a decent amount. But, cumulative percent change in normal or in number of households since 1990 by income group in 2000 and 2015, San Francisco and Bay Area. Bay Area change, which are the colors over here. San Francisco change is the orange and pink colors. Again, not looking real good on this side. So, once again, anyone that is struggling, I'm out of here. And some of those people who are struggling make a pretty considerable income. Pretty decent, I should say. Maybe not the best, but it's certainly a decent income. And they can't stay. This isn't working. All of our money is being thrown away to, landlords, basically. No thanks. The report finds that housing cost burden has increased for renters and owners of all income groups, but very low income households, less than 50% of AMI, or less than basically $47,350 for a household of two, which again, that's very low, minimum wage kind of thing. Maybe a little bit more than the minimum wage, but experienced large increases in severe cost burden since 1990. Above moderate income households now face rent burden, which they did not face in 1990. Households earning less than 50% of AMI, again $47,000 plus for a household of two, face a situation where housing costs consume 50% or more of their income. The way people make do in San Francisco is by living together. Quote, whoever says this, San Francisco exceeded the region in the rate of growth for couple households without children or other family members and roommate households, the report said. These households are also more likely to be higher income as they are able to combine incomes for multiple working household members. So again, it's like the Mexicans. We see this in Florida all the time. They come over, 3, 4 families in one house, and I'm talking just an average house over here. They're all contributing. They're all making lower income, but combined, hey, they're living like kings. But they're living with different families. Like, I couldn't picture myself living with different families in my house. Like inside my house, you mean like on your property? You got a few acres, kind of a thing. You have like no, in your own house. 3 bedroom, 4 bedroom. Yeah, we got 3 families here. 4, like whoa. So that's how they do to survive. But this is California, and I'm not talking about, like we see. I say Mexican because in Florida, that's what we see a lot of. There's a lot of Mexicans in Florida, and they group together. It's a very common thing here. A lot of them pick strawberries and fruits and things like that down here. But that's how they live. That's just the way it is. It's like a known fact. So they're okay with it. The average American's not normally okay with living with a bunch of people. The American lifestyle, the American dream. That's not what we normally do here. So California, nice incomes, guys, we're going to go ahead and pile up in the house anyways. So we can just afford to freaking live here and actually have a smidgen of the American dream if we can help it. Go out to dinner, a little nightlife, since we're all paying in the same house. Like, crazy. This is why San Francisco is a place where people with relatively high incomes can feel squeezed, earning less than 120% of AMI for an individual worker, thus earning less than $91,200 a year. After the blistering home price spike earlier this year, the big fade has set in. Read, what the heck is going on in San Francisco's housing market? And again, you know me, I'll link this story for you guys if you want to read it a little further, whatever. That was the main story, but if you want to read that other story, it's at the bottom. Again, this can't just continue. What happens when all those taxpayers leave in California, at least San Francisco anyways? But again, where are you going to go in California? It's freaking expensive everywhere. And what are they saying? People are moving to Florida and people are moving to Texas. No state income tax? Oh, please. They're all over it. Can't blame them, to be honest with you. So, anyway, take care.